How to sign 100k property sourcing clients for your property business. So right now you might be charging 3k or maybe 5k on one-off deals for clients, and that's okay, but it's transactional in nature and it's one and done. In this video, I'm going to go through how you can then take long-term commitments from investors and the clients that you're working with who aren't just looking to buy one deal but are looking to buy 10 plus deals. And we've been able to do that in our own business. It increased the lifetime value of each client by 1,000%. This significantly improves the cash flow of your business, so you're not worried about where the money's going to come in month upon month. It makes it scalable and repeatable with just a few tweaks to your sales process. So in this video we're going to cover exactly that using our 6-step process. So step 1 is how do you target your ideal investor so you get 2 to 3 times more value instantly by going after the 20% of people that move the needle for your business. Then step 2 is how do you get all the ammo you need to sell investors on working with you through deep dive discovery phase. So here is the part where we get extensive research. We're going to deliver a catered investment plan with their specific needs and create massive buy-in. Then step 3 is how to use the exact framework top financial advisors use to assess attitude to risk. This lowers the perceived risk of investing with you and allows people to stop being on the fence and actually take action. So you might have experienced that. Step 4 is how do you answer the all-important question every investor needs answering before they decide to work with you. We do that through using the thing called a dynamic demonstration asset, where we answer all of those questions, which gives you maximum credibility with every prospective investor that you work with. Step 5, how do you then go and 10x the lifetime value of your client by presenting customized investment plans which you give to investors, which gives them clarity and vision, turning you from just another service provider, which many people are, to a trusted advisor. Then step 6 is how do you then double your close rate by transforming and position yourself as the trusted advisor. How do you do that? What things you need to do at the end? And that comes down to what it is you're offering and how you are different from everybody else within the market, giving clarity to the investor why they should choose you over anybody else. So the first thing we needed to fix in our sales process was the clients we were working with. Either this makes or breaks the business, and we could clearly start telling that straight away. So we strategically identified and engaged with prospects who are closely aligned with our past case studies. So the reason why is in our company, we originally essentially took a wide range of clients, and yes, you can help these people, but it does add additional complexities and not for the reason that you might think. So here's the thing. It's not easy to target and attract the right people consistently if you're trying to appeal to everybody. And in the end, you end up appealing to no one because you're not being specific. The thing is, the common method of just targeting everybody from London with money, when you think about it, is like exactly what everybody else is doing. So you're competing against everybody else. Now, the position that we wanted to take, and the one that I would be most advocate to anybody doing this, is that you want to make a comparison between not apples to apples, which is what many people are doing, but apples to oranges. I want to be completely different and stand out, and I want to be the right company for the right person. So the right person to work with, the right trusted advisor, it needs to be exactly right for them, right? So that's how you then distinguish yourself from everybody else within the market, because this is for this specific type of person and I am them. So they're going to choose you over anybody else. Then the key thing here then is that you're not the right fit for everybody, and the key thing is that that's okay, right? So you may go broader the bigger you get, but many of the companies who've gone broader have got years and years of track record, they've got the credibility, and you graduate to a broader market, but you start very narrowly. And that is what we've done in every single company that we've had, is go very narrow originally and then expand out as we've gone further into it and got more credibility. So just start narrow, get your wins, and then use and transfer those wins into a wider market. And a lot of the cases, the market is never necessarily going to be saturated because you're going to be so specific. Then you have a wide enough market to work with that gives you strategic competitive advantage. So you might never end up needing to broaden that market, and depends on what your aspirations and goals are. So you might not even get to that point, but you have the opportunity once you've got all of the credibility to go, right, I'm going to go after a broader market, and then you can work with loads more people. But originally, just start with a specific person in mind and then have wider customer segments as you go on. Add more ideal client profiles or more ideal investor profiles, as you go and move forward in your business journey. A perfect example of this was when we were running our marketing agency. We were able to get results for various types of clients in all different industries, from car dealerships, architects, chiropractors, you name it, we worked with them. But once we were able to focus and identify on our best performing clients, which were medical aesthetics, then we were able to go even deeper into that and find the most profitable segment of those, and it was plastic surgeons in LA and New York. So we worked with plastic surgeons and cosmetic dentists, LA, New York. These people paid the most and stayed the longest, so that was what we were looking at. So it's crucial to find front-end clients, but really the most profitable ones, which were the ones who were able to refer us. So they were referring 2 to 3 people each person, so that's what made it really, really valuable. So it's not always just the front-end metrics to say like, oh, I've got this person in. It's the people who then refer you, because that's free advertising, right? Every single person that goes and refers you on. So if I can get 2 or 3 other people for all that money I spent, if I spent, for example, £1,000 to acquire a client, and that's in terms of advertising, and I was able to get, say you were charging 5,000 and you get 3 extra clients, you get 1 client from the £1,000 you spend, then you're going to get 2 to 3 others, you're making like 15 grand on the back end, in a total of like 20 grand if you get 3 additional referrals. So that is massive when you think about it, and the profitability is just so much higher just by making that small tweak. The other point then that made it a no-brainer for us to work with these clients is that if I'm working with prospective clients and they're assessing who to work with, if they see someone who's exactly like them and can see exactly what we're doing for them, it makes it much easier, because there is mirroring to the fact that if I work with a dentist, I can also get a dentist results because they understand exactly how I got results for this person. Whereas if it was an IT consultant, which is all the way over here, a different vertical of people, then they don't see the comparison between them and a dentist, and they want to see themselves in the success stories that you have for clients. So if I'm doing that, you might have seen banks and they'll use like people from different ethnic backgrounds, different political sides, different, looks and dresses and all this kind of thing, ages, whatever it is. It's because they're trying to represent multiple different people who will see themselves in the advertising, see themselves in the marketing message. That is what we're trying to do here. And it makes it, you haven't got like all the budget that these big banks have got. You've got a small defined budget. So being very specific in the marketing you have is why this is really, really important. The quote then, the riches are in the niches, applies here. And it goes better if you're American because it's niches. But anyway, the goal then is to be the right choice for the right person when it comes down to how you can relate best to that person. So not just on a demographic level, like gender, location, on a psychographic level, really about understanding and solving their problem. So everyone thinks that their problem is unique, which is why if you work with various different clients, then they can't see the commonalities between them. This is why the marketing that doesn't actually show them doesn't really appeal. So it feels like they're not being heard, which is why we show more case studies and testimonials from people who are exactly like them. And this works the best, particularly for us anyway. It's about identifying the ideal clients who you want to work with, not just on a demographic level, but on a psychographic level. Take the top 20% of these performing clients and double the amount that you're doing with these clients. And by focusing on that segment, you can then significantly grow your business as a result. The second step then is crafting deep dive discovery sessions, where we're essentially getting extensive research to understand the client's current predicament along with where it is that they want to go. But the idea is that we're looking at their needs not on a short-term but a long-term basis, collecting detailed information from them, such as their assets, their liabilities, their income, their expenses, their investments, their retirement accounts, pretty much everything, right? The goal here is to understand the client's goals and aspirations and the challenges better than anybody else, right? The person who can understand the client and the problem and can articulate it the best wins. And that's by understanding the client. The client who feels understood is the one that is going to invest with you over anybody else. The key thing here then is to remove the short-term focus and the transactional nature of the business and focus on the client's long-term vision. So if you think about it, right, It's a bit like when you go to the dentist, and a standard dentist will you just come in when there's a problem, right? So if I've got a toothache, I'll come in and then I'm back out the door just after it's solved. Typical standard stuff that you would expect from a standard dentist. When you go to a high-paid dentist, they focus on the goal, right? So the ultimate goal is healthy white teeth that last for a long time, well, as long as possible, right? So in order to achieve that, then you need to have regular checkups, you need to see hygienists regularly, you need to be taught how to do the correct brushing of your teeth and the technique for that. You'll also need to floss daily, and you'll have to brush your teeth twice a day. So there's like a whole process, and it's a transformation that you create in towards an end goal. You can see like a standard dentist is very transactional in the way that they work, but a highly paid specialist is about making a transformation, helping the client with their long-term goal, and they get paid the big bucks. So in turn, they're adding significantly more value over time, which is why they're able to charge more. So you have long-term clients and increasing your lifetime value of each client. This is the key to earning more, and this gives us an understanding to present to the prospective investor not just a deal, but a transformation from where they are to where they want to be. What we need to do then in our discovery session is to document their short-term and long-term financial goals, such as buying a house, saving for their child's education, retirement planning, or debt reduction, whatever it is. Then organize comprehensive discovery sessions with your potential prospective investors and deeply understanding their investment goals, their financial background, and risk tolerance. So this is the depth of understanding you need in order to build trust and respect and position your firm as a trusted advisor rather than another service provider, just another sourcing company out there that just sells deals. Step 3 then is something that top financial advisors use, and it really comes down to the thing that every investor has in the back of their mind, which is risk. What we need to be able to do then is assess the attitude to risk. So with every investor, we need to understand their risk tolerance, their investment preferences, and as part of any transaction, we want to be able to reduce risk. Risk is the thing that every investor has in the back of their mind, and I know I mentioned this, but I just need to stress it because risk is the thing that stops people from investing. So the larger the investment, the higher the perceived risk, and this is crucial because we need to understand the client's risk tolerance and how we can mitigate it. My business partner was actually in financial services, and his background was dealing with financial products. The thing that most people don't understand and don't do in property when selling a deal or raising finance is to take in account the client's risk, right? Their risk profile. So notice how I use the words of perceived risk. So although you might feel that this is not a risky investment, that, you know, as safe as houses and all that, because likely you know more than the prospective investor you were selling a deal to, unless they're a sophisticated investor, bought lots of deals. I've got another video on that which you can check out. There's link somewhere around this video. But the vast majority are working with clients who are doing their first investment, right? Like at least that is usually the case for us anyway. It's their first investment. So there are multiple ifs that go into this that you go through with every prospect in their mind, and we need to simply apply this formula in order to really reduce the amount of risk perceived by the person so that they can get off the fence and buy. And it's known as the sales of velocity equation. So your promise, which is what you can deliver them, which is part of the equation, which is the first part. The second part then is risk reversal, which is the security that you can offer them, which can be done in a few ways, but we'll go over that. Plus the evidence and proof that you can deliver on what it is that you say you're going to deliver. And each one of these is weighted at 10% for promise, 10% for risk reversal and security, and 80% of the weight is on the evidence, right? So if you've done this correctly, you will exceed the prospective investors' action threshold, is what we call it, and they will invest, right? So we've been able to meet their kind of buying threshold. All the signals are going off in their head, and then they're saying, right, this is a worthwhile investment. So the thing here is you are starting out with a lack of evidence in many cases, which is why you don't have that ability to just go and ask and say, right, we're going to give you low percentages. we're going to give you a pretty standard, vanilla buy-to-let in many cases, right? Because the thing is, when you're in this scenario, you're trying to say that we can get all money out deals and we can do this and we can do that and we can do this. And the higher the promise, that is not the way to really think about it. You might be able to do it in the short term, but it's going to hurt your business in the long term. Because if you're trying to get all money out deals all the time for investors, it makes it very, very hard to scale, because those deals just don't come around all the time. So it's actually causing your business to be smaller than it should be really over the long term. And you would address that throughout your process and understanding who you're targeting as well. So part of it then is about risk reversal. So we said about the promise, you're going to have a bolder promise. You're going to have to make a bolder promise to get clients originally in many cases. Otherwise, you're going to struggle. But we also need risk reversal in there. So risk reversal comes down to how can you give them less risk, right? So we want to reduce that risk. So a couple of things that you can do, but guarantees help a lot here. So a lot of the clients that we work with, we help craft guarantees for them so that when a client is coming through, when they haven't got as much evidence to lean on, then we then help them with mitigating the risk and the perceived risk for each investor. So guarantees are a really good way of you reversing the risk, because those are the two things that you can do and you can control until you've built enough body of evidence to be able to show people, like, look, I've done this time and time again and these are the results we've got. Until you've got that ability in which the evidence will be able to carry you through, then you're going to have to rely on the promise and the risk reversal. So the key then is about gaining more evidence, and obviously you've got to use your promise and your risk reversal to begin with, but then as you mature as a business, you need to be looking at evidence. And this is why security is perception. So if you've got your money in the bank, it's a perception that is very low risk. So do you see how risk then impacts the rest of this equation? So sales speed and the velocity in which you do sales comes down to the risk and the perceived risk. So if we have low perceived risk, we don't actually have to give as much on the promise of what we're going to give them. We don't have to give as much in guarantees. We just show the evidence. And that's why banks and institutions have so much weight when it comes to these things and can offer lower percentages, is because they have all those things in place. Whereas like cryptos, where they're promising crazy ass returns, has really high risk, which doesn't have high security, but has big promises, right? They got massive promises, which is carrying them. But again, a lot of these cryptos are going bust because they're not real. It's not reality, right? So we need to have a balance between our promise, our risk reversal, and our evidence, and just build evidence up over time so that we can lower our promise and risk reversal elements like our guarantees. We don't have to be as bold in our claims. We don't have to do those things if we've got the weight of evidence. And then you can see this done time and time again. So just focused on getting as much evidence and documenting the evidence as much as possible. So the final points on step 3 then is, in order to assess risk tolerance, then we need to use in-depth questioning to gauge their risk tolerance and their investment preferences. So ask questions such as, how comfortable are you with taking risk in your investment? Have you ever experienced significant losses in your investments? How did you handle those losses if you did experience them? What is your investment experience and knowledge like? It is crucial to gain an understanding of this level of investment knowledge and previous experience with financial products, because what we're trying to understand is how they dealt with losses, because we need to understand how they deal with that. Somebody who's lost money is going to invest differently than somebody who's wide-eyed and bushy-tailed, who's just got optimistic views of how money works. So we need to get them based on realities as well, and also understanding that risk tolerance means that we're not going to put them into crazy high-risk investments where, hey, it might work, it might not. You don't have as much of that issue with property, but again, if you're going to go and do planning and you might not get the plan in, they might not be comfortable with that type of thing, right? Whereas they might be more comfortable with a standard buy-to-let. So we just need to understand risk tolerances there to make sure that we're providing the right investment opportunity to each client. Once you have all this information, then you can cater towards the investor's specific needs. And also the thing that we want to then focus on is, changing their perceived risk. And in order to do that, we need to answer some crucial questions, which is step 4. So step 4 is how we answer these questions. Why this? Why now? Why you? And why here? So these questions are things that need to be answered for the prospective investors before they make the decision to buy. This makes all the difference and positions us correctly. We foremost want to be seen as a trusted advisor, which I stress throughout this in the sales process, not just another service provider, not just another sourcing company, not just somebody who's going to sell deals to people. We need to include some core elements into our demonstration asset, the things that we could actually give over to an investor. The core concept then covers why your particular methodology of investing is the right thing to invest in, answering why property and why your model is the best thing that they can put their money into. Then we've got the opportunities versus threats. So this answers the question of why now. This can be for various reasons. It could be because of government, it could be because of the economy, it could be new developments happening within the area. The key here is to resonate with a prospective investor with things that best align with them and opportunities and threats that align with them. So it needs to directly impact them. So inflation is going to hit them in their money situation in the bank. New legislation could be hitting them. Whatever's prudent at the time that's going to affect them is what we need to then stress so that it gets them to take action. We then have the bio section. This answers the all-important question of why you. In order to do that, we have to show evidence, which I talked about earlier, that you can deliver on what it is that you say you're going to deliver. So the best way of doing this is showcasing recent deals, related experience, along with case studies and testimonials. Now, if you're newer, it's harder, but it's not impossible. So the idea is that you can showcase transferable skills or highlight your knowledge so that they still have belief in you as a credible person who can deliver on these things. The next thing is location analysis. Why here? You need to answer this for investors to believe in the location you've chosen will perform for the long term. Is there development happening in the area? Is there investment going in? What does the state of employment look like for that area? Are there key things then to back up all the claims that you're going to make about it? Is there data? Is there market research? Giving the investor the confidence they need to move forward. And then we've also got the investment analysis and setting clear expectations. So this comes down to breakdowns of financials, the costs, the profit margin, the return on investment, how the investors can get their money back, how they can get profitable. Give them examples of what they could possibly be achieving, and maybe past deals will allow them to see that. These answers are the most important questions, and there are a lot more that we cover in the demonstration asset, which has allowed not only ourselves but our students to raise millions of pounds in finance, source tens of millions of pounds in deals. And it's something I've actually broken down in a video, so you can probably check that out below. Is how to get to 20 to 30k per month in your property investment business. So if you haven't checked that out, go check that out. It's linked below. Let's move on to step 5. This is where I believe the magic happens within the process. The ability to present customized investment plans to every single investor is the biggest lever that you can pull. Is the ability to give people clarity and a path to follow, and it completely transforms the nature of your relationship with the prospect. So you are a guide throughout their journey as opposed to just another step along the road. In many cases, every other sourcing company out there is just a step. We're able to guide them throughout the process to the end result of where they want to be. So if you can clearly define their end goal and you can get them to buy in, then all other objections that the people may have fall by the wayside, because they have no objections as long as they believe you're the person who's going to help them get there. In order to do this, we need to develop and present bespoke investment plans. So using a structured, clear and concise proposal method, outlining their portfolio growth based on the service that you provide, should have everything that you need because you went in depth in the discovery session and your research session with the client, and allows you to build out this plan. So the idea is that you can highlight your expertise and commitment by tailoring these plans to address the specific needs of the client and their goals. Having a clearly defined plan to reach their goals gives the investor the confidence and creates the buy-in. This is where we get the long-term commitment we're really looking for from the client, as the plan gets them to see how their money can work for them and the trajectory of building their wealth over the long term. So that is what we're doing with our investment plans. You need a plan to be able to present to people so that they have confidence. So you need to show the actual process of them building their wealth and what that looks like over time. So a couple of ways of doing that: if it's portfolio build, if it's based on the interest that they're going to make, whatever it is, they need to be able to visualize it, and it needs to be tangible. If it's tangible, then they can have the confidence to move forward. If you've done everything correctly up until this point, the last part, which is step 6, the offer, should be just a tap in. This is the final part of the process, and what do they actually get as part of the process of working with you? So what we're trying to understand is, what do you do and what do you deliver for people, and how do you get them involved to work with you? That's all it is. They just want to know, what is the investment? How long does it take? You know, the standard stuff, that what does look like working with you? And they should be sold on that at this point. But if you've done this correctly, you've positioned your firm as a trusted advisor. I've mentioned this time and time again before, but we want to do this early on in the discussions, positioning us as a partner who's dedicated to the achievement of the client's goals, and it established us as a trusted advisor. Positioning us before this is really, really crucial, because we shouldn't be discussing fees or anything like that until we've got agreements on the recognition of value that you bring, not as a cost, but a value add to what it is that they're doing. And once we've agreed upon this and we build the trust and commitment, and only at that point do we start introducing strategic pricing options and strategic pricing presentation that we deliver. This is where we give flexible pricing options, complete with a clear ROI projection of how they're going to build that money that they invest with us. And this should justify the price of working with us 10x over, really, because we understand that the level of discount that we get on each property, not only that, the time that we save them, because if they were to do it themselves, we actually price that in, like how much time and effort that would take. And if we know how much their salary is, we can actually say, hey, you're going to be spending all of this time. It more than justifies our fees, and we're working with like 6-figure plus earners in many cases, so it's definitely not worth their time to drive to, you know, Wales and do all of this stuff. It's just not realistic, right? So we address that, and it's really, really important to do that up front, and they can see the clear value in what it is that you do. This is where we also provide sensible investment guarantees. So this is how you address the risk reversal element that we talked about earlier and provide security within their investment as a whole. So offering realistic performance guarantees spread over a 12-month period is how we do it, and we build trust and mitigate the investors' concerns around risk, avoiding promising unrealistic expectations of short-term returns. This prevents us from appearing untrustworthy. This is what we make sure that we don't do. So it's giving realistic in terms of what we can provide on guarantees. This is why setting clear expectations is so important, because if it doesn't happen, it can make it harder to deliver the service for the client, and it makes it harder to scale the business. But not only that, it also means that we lose faith in the process from the client. So the client is going to lose faith in our process, and that can cause us to have at best refunds, negative reviews at worst, and possibly even worse than that, legal action. So it's crucial that you address these within your sales process upfront before any money is exchanged. We need to think about the promise, the risk reversal, and the evidence to build up that sales velocity, and that really comes down to setting clear and precise expectations of what it is that you can deliver from the get-go. So in this, we've covered from top to bottom, step 1, how to target ideal investors that are 2 to 3 times more valuable to you instantly just by looking at the top 20% of the clients that move the needle. I think we covered that right there in step 1. Step 2, then we talked about how to get all of the ammo you need to sell to investors on working with them through deep dive discovery sessions, where we cover extensive research so you can deliver an investment plan that's catered towards the specific needs of the investor and creates massive buy-in through them. So we've covered that. Step 3 was how to use the exact framework top financial advisors use to assess the attitude to risk so that they can lower the perceived risk of investing with you, and that allows them to stop being on the fence so they can take action and work with you. Step 4, how to answer the all-important questions that every investor needs answering before they decide to work with you. We did that where we covered the demonstration asset, and what we do there is something that gives you maximum credibility with every single prospect that you work with. So go through that demonstration asset section again if you haven't already. Step 5 then, how to 10x the lifetime value client by presenting customized investment plans that you can give to investors that gives them clarity and vision, turning you from a service provider into a trusted advisor. And then the final step, step 6, is how to double your close rate by transforming and positioning you from just another service provider to a trusted advisor. And that comes down to what it is that you offer and packaging that up and delivering it to the client. If you want help implementing this for your property business, then you should at least consider talking to a member of our team. It's simply go and book a call. It's in the description below, or you can go to www.tycooncall.com. If you like this video, then go and check out what type of clients are you sourcing property for. It's a video that we did extensively breaking down the types of clients that we target within our business. So go check that out somewhere around this video.